All right, let's jump into it. Time to do a little bit of a weekend sort of review. Give us a chance to sort of have a look at how the how the charts, the markets, and that sort of closed up for the week. See if we can sort of pick out some plans, some attacks for the upcoming week. Look where we are now, just 11 o'clock or 11:07 on 15th of September. So it's pushing a little bit late, but that's all right. Still got plenty of time before markets kick off tomorrow, of course. All right, look, let's start off with gold because gold, everybody knows, new all-time highs. Bang! It's funny, I was saying this to my partner recently. I'm like, oh, gold. I'm sure she loves hearing it. Gold hit a new all-time high. She's like, yeah, I feel like I've heard that before. I'm like, yeah, that's because it's been on a pretty big sort of run over the last sort of 6 months, year or so like this. Really sort of hammering up. But look, the more sort of medium term play is if you sort of watch what I was doing last week. I think it was it was the Thursday. You can tell because look at the chart here. And I was setting this up here, and I was just breaking it down with this idea. We go, these are the sellers. They're holding the line here. We could see that the buyers were really pushing up each time. And I referenced a couple of points, and if you've seen it, great. If you're not, then I can recap it. But we look at the price action that happened through this last larger range, where we were sort of 2350s up until 2480, and in change, kind of about $120 move, and it was moving up and down. We got the buys down there. We saw the buys advance here, and I remember because I put the chart on X at the time of this breakout here coming through here and saying, look, here we go because we've got the break of that sort of falling resistance, back tested the top side. This is a very textbook technical break of these sort of things, whereas like things don't break and then just shoot up like this. They'll break. They'll come back, they'll burn the early position makers and that, and then they'll sort of go. Anyway, regardless of that, the main part takeaway of this is you got the buyers on the support, buyers on the support. We saw the buyers move up and start to advance. This is what we saw this week. We saw, we've got the buyers down here, we've got the buyers here. We saw it start to advance up. This actually started to advance going back 2 weeks because this sell down over here was Friday, Friday a week ago, NFP. And the interesting thing around this kind of period was that you saw this break come through this little sort of channel coming through here. And the lead up into that news that was coming out, let's put it on a little bit of a better time frame. We could see that, it was coming up, they were buying up, they were buying up, they were buying up, they were hanging right near this breakout. Like this, we have been sort of like sitting in for, effectively, 24th of, no, sorry, 16th of August, so middle of August, 1 month, because, it's 15th, we broke out 16th and that, 1 month or so, we've been sitting in this period here, of course, minus 1 week at this NFP point here, but you can see it pushing towards this resistance area. We know the sellers are here. We've seen it time and time again that they're sort of sitting around this lot here. It got right to this point here, and then NFP came out. And if you saw, obviously you saw NFP. NFP sort of came in weak numbers, but not as weak as was expected, as the sort of market had sort of been pricing for, sort of predicting basically. And what we saw basically with that section there is that the market was positioning itself to get the breakout. It didn't have the data from that NFP to support it, and so it sold off, and it sold off, it sold off, and that was it's in a Friday night, comes back down here, that's fine, resets and goes again. And this is what I'm saying. It drove up coming into that news. Look at the price action that we had coming up into CPI. Same thing. It was driving up, ready, ready, ready. And then, of course, CPI was very hectic. It was all over the place in that. But obviously, the market didn't see that as, battle stations like, let's go hunker down, go for gold. And so we saw a bit of a sell-off again. And you got to think how many people were trying to sort of capture this kind of move and thinking we're going to see it happen again, come down here. But of course, we came in at this high level here. So you could see that this whole move was setting up 2 weeks prior to this actual breakout. It was just looking for the right kind of data to support some sort of technical level of that breakout. And we got that sort of coming really with the ECB on Thursday night. And then, of course, we saw the continuation and this the grind through this area up over here. So, I mean, Friday, these were the thing. I was thinking, look, any pullback to these levels here, these are the possible levels. If we get pullback here, we're going to go back here and then shoot back up. And of course, it just really sort of ran forward with it. So you can get rid of these. But what we're seeing is the price target. Look at this. Smack. bang. And this is the important thing, particularly with technical analysis, and that is to not just sort of be okay, telling the story and seeing how the price and the flows are moving, but to actually go, okay, well, where am I going to put my targets? Where am I going to take my bank? You know what I mean? I'm much more of a sort of get in here, get out here, get in here, get out, get in and out all the way through. This time I've actually been holding some runners. I'm trying to flex that muscle. I'm trying to set up a different account. Well, I have set up a different account, but I'm trying to really exercise the idea of having these things and not just jumping on it as soon as it goes. Particularly when you see these, like these are very textbook breakout points. You've got the size of this range that we were respecting for a month. That's the size of the top side. And as you can see, coming into the end of it there, market has just clipped it. I mean, it's almost on spot that it actually hits it where it says price target as well. But as you said, it's not a time limit. It's a price level. It came right up here, clipped it, and then obviously bang, we saw a little bit of a sell down into the week close. But really with these things, last couple of hours, I say this every week, but last couple of hours of the market don't really mean anything because most of the, I mean, obviously Asia's well done by then, Europe's done, and you get a couple of stragglers and people still sitting at their desks in the US, I guess. But generally, most of the time, we don't get much of a movement. But last little part through here, we did see that little kick off. It was sort of had this little consolidation period here, and then as you can see, bang, as US started to kick into line, that's where it really got that last little kick up to the top and sort of hit that first price target there. So, look, I mean, that's just a recap of what happened with gold. I mean, most people know what's happened with gold. We're still at all-time highs. So now we got to think sort of where to from here. So, yes, this little technical move, the sort of the measured move of this range has been clipped and taken out. So that's why you've seen a bit of a sell down. And, understandably, like myself as well, people have taken some profits at these things. It's a decent move out the top side here. What have we gone 28 to, it's about a $60 move out the top side here. But we've also got this other price target that we've been looking at from this bigger range. Now, with this range here, we sort of highs, lows, this kind of thing moving forward. It came out the top and obviously it just sort of consolidated this period around here out the top for a long time. So this is why this is an understandable price level. No, it didn't sort of break out here, back test, and then go straight to this. But this price target still remains plausible in my eyes, and this is at 2600. It's also a big round number, which we know as well. So look, I don't think gold's done. I don't see anything changing over the weekend that really makes you sort of think, oh no, wait, you know what, we don't need gold anymore. I do think we may potentially be coming towards a medium term high, only just for the fact that I mean, look at it, it's still pumping along. It's still very much in a sort of bullish sort of momentum coming through here. But you got to sort of think as well that sort of a lot of people are, in a lot of profit in that. And, once they get the right sort of cracks, we could see things sort of sort of fall down and come back down a little bit. So I wouldn't be surprised look, I'm not saying this week, I'm not saying, even the next 2 weeks of that. Maybe it does come in these 2 weeks. I don't know. I really don't. But I wouldn't say that, okay, we're up here. We're never going to be seeing these levels down here again. I think there's definitely a chance of sort of getting back into this sort of lower 2500. Now, we could still go up here to sort of, 2620, 2630 first, and then sort of make a big move coming back down. But remember these sort of moves like this here. There was a point, and if you didn't know anything past here, and this is where you're in a point in time, you'll think, I mean, look at this. Look at this. Oh, this run through here. This is massive. This is from around 2290s, 2294 up to it's a near $200 move, $180 move up there. You know what I mean? At that time, you're thinking, wow, could this thing ever stop? And bang, crashes back down, and sort of it drops $180 or whatever it does. What is that actually? 120 bucks or so. So, just because you sort of broke it out, and particularly with that sort of the steepness of this, I do believe it's running hot. I do believe that people are trying to short it. The thing is with these big breakouts as well, like it seems like a lot of people like to sort of, they see a breakout like this and they think, oh, God, look at this, I'm going to short it. Like, what? Like, it's literally just had consolidation. You can see the buyers moving up, moving up, moving up, and breaking out, and they're like, oh, now this is the time to short. And look, I've done this as well, but I've learned, that's obviously not the key. And you can hold on, hold on, hold on, and also you don't have to catch the very top of things. You pick your levels, and you say, look, once we break these ones, or even on a higher time frame or something, then you kind of think, okay, maybe we could see some downside. But for now, I think it's very much still in just by the dip status and that. And the reason that that's relevant is because you can see here that this flattens out. People put their shorts, they put their stops over here, and it grinds through and hits stop, 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 stops, goes sideways. People put their stops here, and it powers right through. And this goes on and on, sort of thing. So if we have a look at where we could see potentially, say, this little period through here, that's a little bit thinner. We could say that, look, potentially underneath this rising support that it's starting to build with at the moment, we could see a little bit of a cooling. Doesn't mean it's going to be a turnaround, but these are the kind of levels that we're seeing that'll be points of interest as we're moving forward. And so as we sort of pick these out and we see how the market reacts to them on the way up, we can start to use these as like sort of confirmation levels and start to link things together for where we may be able to see a little bit of a pullback and sort of come back down here. But as we said, with all these things, and if you've been watching what I've been doing, particularly the last couple of weeks with that pullback from Aussie from above 868, you get the breakout, you get the retests of these. And look, we did have a retest on a very small scale, but you'll have a small scale sort of retest, and then generally you'll have a bigger one as well. So look, I would be looking at some stage for a potential sort of medium term top within the next sort of maybe 50, $60 range, somewhere over here. Maybe once we hit this 2600, this price target, maybe a little bit of an overshoot. But then I'll be starting to sort of look for it to sort of level out and then sort of maybe come back down. And then you'll be targeting, 25, 30 as a retest of this, because there are people that got short here and they haven't taken it. And when they get a chance to get out for zero, they're going to sort of take that option, and that's going to give you another kick on and another lot of buying. So certainly, I think, over the couple of weeks and that, maybe FOMC will be the one that sort of does it. I mean, a lot of people are very bearish and understandably on the US dollar, but, maybe an extended US dollar squeeze could be the catalyst that sees a little bit of a sellback, a little bit of a pushback on gold. You need to consider all these sort of things and that with it all, but I think it's sort of in the here and now and that. I'm certainly not looking to short it, not quite yet. I'll sort of wait to sort of see how Asia opens up. I wouldn't be surprised, as I said, if we get up around this 2600, complete this this sort of price target, and then really kind of assess where we might be going from there. But at the moment, as you can see, it's just grinding, grinding, grinding. And this is, as I said, this is really just a squeeze kind of mentality where it's all just straight up in one direction, because people are putting their stops, they're trying to catch the tops, and they're getting clipped out, clipped out, clipped out, clipped out, clipped out. So yeah, look, we're pretty overboard on the 4 hour here. I would disregard this last candle of the week. I don't think that means anything. Maybe we see an early push down to grab a little bit of liquidity early in the week, and then we see a flip and go up. So if we open up and we come down a little bit, I don't think it's anything to worry about. I think you sort of look for these sort of like support areas, and you sort of think maybe around 64 we might be able to get another swing to sort of be moving up to around 2600. But realistically, I think 2600 is our first first target was here, is the next sort of price target, which is only $23 off where we're at now, and really it's only $15 off the highs of what we got moving into the week. So again, wait till see how Asia opens up. Maybe it just runs hard. But yeah, we'll have to sort of wait and see, make a plan with it all. But I think any sort of dips down here, we're just going to be bought up, and then we're going to be looking up around the sort of 2600. So just like the other pattern we had, if we have something like this, then we'll be looking to go back up to our next price target at 2600. All right, so DXY, flip across. DXY obviously sold down. It left its gap open from Friday, which is quite interesting actually. And this is really just, it's still ongoing. Like, this was the play that we had going through the week, and as you can see, this is the little path that we said. Look, you go up above this into this section here. That's what I said. The market's going to use that. Well, I use that as a sell opportunity. And look at this, just the sell down as it tried to sort of get back up above this zone. It got absolutely demolished and really came back down here. But we've seen the market value it at this point previously. You can see over here. We can see there was a little bit of congestion here. It's almost the top of this section here. I mean, this is a bit of an overshoot, so you can't really count it too much here. I suppose you got a little wick down over here. But the point being is that sort of like we knew that there was a chance that you may see some more interest and buying come in from this section. And this is why we had this little zone marked up through here. It obviously tried to sort of push down. We had a little rally off it, push down, but it managed to hold it enough times. So look, with this, I think you sort of I wouldn't be surprised if we see a little bit of a push up again. This could gives that little bit of weakness on gold, a little bit more of a buying opportunity. I don't see it necessarily turning around and pushing straight back up here. But again, we got FOMC coming up this week, and the big question there is really still 25 base point or 50 base point. I'm in the 25 base point cut camp. I don't think 50 base point is appropriate for a first touch of the market. I've heard some arguments for the 50 base point, which seem sort of like somewhat plausible, mainly that sort of like, the Fed's been a little bit slow to act. They skipped July. They should have cut in July. They didn't do that. Now they're going to be looking a bit of catch up. But I think, look, honestly, as much as people would say it doesn't matter, I do believe the optics are important with this because if you hit the 50 base point cut straight off the bat, I think that's going to send the wrong message to the markets that they're sort of behind the curve, that they're sort of, oh my God, panic stations. We really need to act hard and fast now. I think that's going to be something that's definitely got to play somewhat into their sort of consideration. And that being said, I think that if you put a 50 base point cut straight off the bat, I mean, initial reaction you're going to see smash down with US dollar. Depends what happens in the first 3 days as to how the market positions themselves prior to this sort of cut, which again is going to be weighing on US dollar DXY and putting pressure on to sort of stay in this lower half of this range. But I think sort of equity markets are going to freak if you get a 50 base point. I think they're going to sort of, and that's going to hit risk a bit. So, what I mean, you got to think about it. So if they sort of freak the markets out, they spook them, and you see equities sell off, that's in the camp of a strong gold. It's obviously at least an initial reaction, textbook reaction, weak DXY. But then, you might sort of see that initial reaction, then you might sort of get the market go, well, hold on, wait, this is actually not a good thing. They've gone very hard. They must know what's going on, and uncertainty is what will sort of breed more sort of fear and risk off through the market. So that'll then flood into equities, and equities will start to sell off. This will affect Aussie, despite a weak US dollar, and you might actually start to see the equity sort of equity markets and that the flows come back out of that, go into safe havens. If US dollar isn't the one of choice, you're going to see CHF, you're going to see JPY, yen. These things continue to sort of strengthen up a little bit. Again, as I said a second ago, it could be stronger for gold as well. So I just think that might be a little bit too hectic with it all. So as I said, that's how, as of the weekend, that's still how I'm sort of playing it. I mean, we'll see how markets react, see what sort of maybe sort of like news or data or commentary and that can come out between now and then to sort of see how they sort of seem to be sort of positioning themselves. But I'm thinking 25 basis point. I think equity markets will enjoy that. I think risk will enjoy that. I think US dollar could be the catalyst to get US dollar down through this area here. Because remember, like with all these sort of things, you're in danger of at the moment really sort of breaking down to the bottom side here. Things to consider with that though is that when everybody's looking for it to come down here, it's when it shoots back up here. Remember what happened? Where was it? It was over here, and I mean, of course, we found out afterwards that all the NFP numbers were just complete garbage, phony. But this one here, and this is how I can pick it up. You can see with the date straight away because the whole market technical. Look at this technical flow here. Boom, boom, little bounce, little bounce. It was coming down, it's coming down. Then out of nowhere, they put 330,000 jobs into the economy or something, which, as I said, we found out, like the month later was revised down 100 or something, and we've just more recently found out that they've overestimated 800,000 through that whole period. So, again, look, if everybody's looking in one direction, that offers a very good opportunity for pain trades in the other direction. So it's something to keep in mind with it all while everyone's thinking you're going to get this major breakdown. But with DXY particularly, you've seen a couple of taps into this area. There's only so many bullets that they can hold here. So it means if we do get a push down to the bottom side, particularly a close 4 hour or above, underneath, 100, 140, 101, 140 here, 140, where we've got this alert set up, then I would say this is going to be the break of this and we're going to come back down to the bottom side here. But for now, as you can see, we're in this little sort of consolidation box, which we're going to just update this a little bit so make it a little bit more visible. This little area through here, and we can see that really we're just ranging. So the idea is that obviously sort of, with cuts, we're underneath, yearly open, that's a big top wick there. If we come out the bottom here, we're going to be going down sub 100, I would say. The flip side of it is that for whatever reason, they find a sustained dollar buying spree. As I said, that could be the catalyst to be looking for if you're looking for that retest in gold of that sort of breakout level, or even lower if it could possibly come. I mean, you'd have to sort of wait and sort of see how the price action is around that. But if we do see a move like that coming out the top side, you want to see above 102.17 to see you move back out of this range, and then we start to look where are our price targets. Here's the depth of the range that puts our price target pretty much up top over here, 103, 103.50, and we get a bit of a US dollar sort of squeeze over here before we sort of reset and start moving down again. But I do think US dollar is going to be on the weak side, moving through to the end of the year, despite sort of some sort of contrary calls. So look, that's a bigger picture with DXY. Looking into it, sort of like coming into week start and that. We can start to draw it. We've got some like little levels here. It's closed pretty much on its little short-term range. Make this one just a zone. And we can say that's our little range there. I mean, obviously the bigger, thicker one is our main area of focus, but these are the levels here. You break up above there, you've got retests at the bottom side here, and then what I would probably be looking almost to do is really just drag a bit of a fib over this one and sort of see what lines up, what sort of gives you a bit of a confluence through these levels of this last sort of sell down. And again, sort of up around this sort of area over here, we saw a little bit of sustained buying as it was trying to sort of push down here, which allowed this to sort of drive back up. It's coming in line with the 50%, so 101.36, excuse me, for a potential cap on this. It would close that little gap that we left open on Friday, and then potentially, just really sort of mill around this low area here. I don't think we're going to get a break before FOMC, but I do think it's going to be holding some some potential sort of some heavy weight on it and have it trading heavy through the first half of the week as the markets sort of price in, start to fully sort of position themselves for a rate cut. Because I mean, end of the day, a textbook response to this is going to be a sharp sell down. As to whether that holds, that's what I was saying. We've got to sort of see what the market reacts to, whether it's 25 or 50, and where the flows decide to go after that. So above sort of 101.17, I'd be looking for sort of sells or corresponding sells around this sort of 101.36 kind of area to really probably just to be mainly sort of fairly quiet, but just to float around this sort of lower area down here. All right, flip across. We've got Aussie. So Aussie, we got our breakout. It has come into an area of interest in that, and obviously got a little bit of a smack back into the end of the week. So we have sort of seen it sort of come into an area that we already have pre-marked, and this is actually an area, if we go back to the start of the year, just over here. So this is where, let's get this out of the way. So this is interesting in this area here because this is where we had that incredible run coming into the end of the last year. We came down, it looked like I actually got, full disclosure, I got absolutely smashed in this area here because I thought we were going to sort of really come back, sort of up, back, consolidate, bang, and then move back up and retest this, lower highs, high highs. We didn't. We just went here and then just went down even further. So I got smacked out in this area here, which was a little bit tough, but that's the name of the game. But we can see this is an area in which it really sort of struggled to get back above once it was below. Zoom to today, we can see that it also played its part as a little bit of a sort of breakdown level, sort of like back in that sort of big sell-off through July. So we know that this area is of interest, whether it's long or short, whichever side the market's on of it, it likes to attempt to sort of hold it on that point. So the fact that we sold back down at this level isn't a surprise. I mean, we got it marked out here. We can see buyers are here, buyers are here. It broke right through, things don't break through the first attempt coming back. Well, 90% of the time they don't, particularly if they're not news-driven events. So what I'm looking at is we've got this sort of little falling resistance, a bit of this channel, swung, it broke through, came up here. Okay, we're trying to find a base through this area here. So really the points of interest for us at the moment are really to take out those highs. We want to see that the sellers at this level, 67.30, call it than that, 67.30 and change. We want to see that the sellers are gone from there. Likewise, we want to see this area coming back here hold if we're looking for longs, because you can see that this is obviously an area that was, the sellers were sort of sitting around this zone. We broke through, came back, bounced, held it, tried to sort of rally up, and obviously smacked onto the nose. Again, last couple of hours of the week, we don't really regard so much. So watch for how it opens up at the start of the week. When we go past, or if we go past 67.35, then I think that's your upside move. We know that the next level where the sellers have been previously, and this is, again, going back to NFP. What's going on here? This one. Going back to NFP. And, this is why we've got the zone here. We could see that there were buyers here, sellers here. We got just above, bang, sellers, smacked it back down. So it stands to reason that we could probably see a little bit of a pushback through this area as well. But it doesn't mean that, it's going to fall over. It just sort of means that, okay, you could expect some selling as you come back up to this level. As it pushes back down, you can look where you want to sort of try to add some more. And again, support and resistance are the same thing, both sides. So if we can pop through this level here, I would say you're probably sort of limited with a fairly sort of smallish move, 20 points or so, up until we find a new set of sellers. But it means that you can look for the pullback, the retest of these highs of that breakout point, and then for the launch to go back up through here. Because as my whole feeling with Aussie is that we do have new yearly highs coming. There's a couple of things you need to weigh up with Aussie though at the moment, because particularly RBA, well, Bullock is a lot more hawkish than Lowe was. We know this, you can hear it in her commentary and the way that she talks about things. But you need to also consider how weak everything seems to be with the Aussie economy. So the balancing act with these things is it's either going to be the recession or the inflation. They're the two main drives, or the juggling act that the central banks are trying to sort of put together. Aussie, I mean, GDP was pretty weak, but Aussie data as a whole isn't shocking, but it's certainly not anything sort of too glamorous. But is it at the point, and this is the question, is it at the point now where you have to sort of think, okay, well, we're about to go into recession, we need to cut at all costs? Well, inflation is still at 3.4%, 3.4, 3.5, so still well above target. If you cut now, that's what stagflation is, basically. You've got a slowing economy with high inflation. So it would sort of stand to reason that they go, well, we're not going to change course till we see some like super panic stations figures and datas coming out, and we know that we have to do that. I mean, we know that the RBA is super slow to act on everything. They were slow to raise rates. They're slow to sort of cut rates. They didn't raise rates as high as everybody else, remember, as well. So, while you had sort of New Zealand at 5.5, and I think was the US around 5.5 or something, so 5.25, I think they were. Or they are actually, because they haven't cut yet, have they? Aussie only got to 4.5, I think. So, we're not as high. And I just sort of think that, to think that they're going to be cutting now, or to think that they're going to be cutting, even this year, while inflation is still almost, 1 3/4 of what their target is, I think that's kind of like going, well, we've almost just given up on the inflation idea, so you guys have to live with inflation, and now we're going to try and sort of avoid the recession. Of course, you don't want recession with it all, but inflation is still the number one topic. And we are the most, well, RBA is the most hawkish of the central banks, particularly at the moment while everybody's talking cuts from the Fed. So this is going to help keep Aussie a little bit elevated. It means that it's sort of like, we're not going to see necessarily, your pullbacks down over here. I could be eating my words in a couple of weeks, of course, who knows. But from a technical standpoint, we've still got this sort of like almost sort of flag pattern happening. Remember, this is the main play that we're looking for here, which is this big drive up, the pullback here to the 38, and a takeoff through here. RSI is now completing this second leg of this little, little pattern that we pulled out the other week and said this is what we want to see it to do. It's oversold. It's tipping up for here. You want to see this drive continue. And this is what I was saying, like this is the bigger picture of Aussie, that you want to see it sort of not sort of just fizzle out. Here's its breakout and comes back down here. You break these levels down here, this is a failed breakout and we're going to see those deeper levels. But at the moment, from a technical standpoint, we've got the breakout. We hit resistance where we expected to. That's fine. Take a breather. Have some people take some profit. Reset. Push through. You know what I mean? I know it's cliche, but nothing goes in a straight line. Look at this move here, where we had this big breakout. Pulled back, even a little gap down, pushed right through. Yes, it stuffed around a couple of times and that before it moved, but just because you have a breakout and then a sort of down day doesn't mean anything. Look at where the RSI was at this point as well. I mean, it was a little bit above sort of where we're pushing through here. So just because you get this one sort of pushback day here doesn't mean the move's over. It's sort of like, oh, it's been stopped on the head. It hit resistance where we expected it to. Now we sort of look to see if it's just going to go, oh, this is just a breather day and on with the show and push up to the top side. Because this large pullback to the 38% and then the drive forward really gives some pretty hefty price targets. And I've been trading the idea that we're going to be seeing a new, a new yearly high for Aussie, basically. As you can see, this buy zone. I've got to find, where did I put this buy zone in? Because this has obviously cleaned it right out. So yeah, it's done very well through here. So I've still got some runners in that. I think my best runner is actually from 66.33. So just around here in this little bottom wick. That's where I go long. And, as I said, normally I'm in and out a bunch of times, but I'm trying to hold these ones to sort of push through, stick to that sort of plan of, that we still have the highs coming. So again, that's the bigger picture. The short term and that, we sort of saw it, obviously attempt to sort of get back through here. A little bit of weakness with it all. That's fine. Drag a little line through here. Seems to be lining up pretty well. I think sort of if we can see a little bit of a push through this falling resistance, that means a test up on 67.30. 67.30, it's held that sort of round number through here with the back test. So yeah, as I said, I think sort of, look, there's a couple of little levels through here. So the main thing you want to be looking for is this level here, 67.35 in change. And that's breakout moving higher. Okay, that's all. So Mondays are always interesting with Asia, so we're going to have to sort of see how we go with this breakout here. If you do get a break below those wicks from Friday, past 90, then realistically I'd probably be looking for a fill of this area over here. So again, back 67.80, 67.75 to 80. That would be a bit more of a buy area for me if we do happen to get a break below these wicks down here. That's fine, whatever. All right, cool. So that's Aussie moving forward. I'll fire through these next ones. We got USD, China, Yuan, sort of testing again this big breakdown level here. And again, this is what we sort of say with it all. We expect to sort of come back up through here. It didn't actually even get up to test this level over here. This green one is that big sort of high time frame support resistance area, which we've seen it sort of fluff around in a little bit here. But yeah, we've got the breakout of this channel. We've got the back test. Came in line with where we had marked out. This, I think, was through a daily level of support. And you can see that the buyers tried to sort of hold it off here. But, for me, I think sort of, again, I'm still looking downside. I think a break, and particularly a daily close underneath 708.7, this red line, means that we're going down to a big round number at 7. I think that's a fairly quick drop off once this move does happen. As you can see, look, it's trying to sort of rally. It's trying to sort of do a bit of a sort of rounded bottom. And look, again, if you get above this little medium term 714 resistance area, then you may see a bit of a push up over here. But I don't think this is going to be the one that sort of gets us back up to 734. And this is another thing, a stronger yuan is generally reminiscent. As much as you sort of all the news and the data you hear out of China still remains to be incredibly weak, we are seeing a bit of a stronger one at the moment. Whether that's a stronger one or a sort of weaker US dollar, I think it's actually a little bit of a combination of the two. But certainly it looks like it's under pressure. We're seeing it pretty much overbought as it's already sort of coming down here. And I don't think this is the negative divergence we saw coming into this area we are seeing a little bit of higher things here, but as you see, these aren't sort of like moving up over here. If this was starting to sort of react better, or this came down lower while we had this RSI moving up high, that would have given us a bit more of a confirmation of a sort of negative divergence. But at the moment, it still remains to be quite under pressure. So again, I would probably just sort of put a little box around this area here and say this is our breakout box here. Once we sort of get a bit of a move above or a move below, I think we're going to see our next directional move. And as I said, it's sort of not just a move below or above, a close out those sides. And finally, finish off with copper. As copper continues to sort of grind a little bit higher, it did have a little bit of a stutter step around this area. I thought it may have sort of, particularly with gold and that moving on as well, I thought copper might have been a bit more of a driver. I mean, we did have this sort of beautiful break, pull back to the buy zone. We consolidated this area. As we know, if we go back, remember how this was? This was the big breakout with copper. Like this was like, going back multiple years from way back up here. Was this like to March 22? So a couple of years though. But certainly we saw the break and then bang and just consolidated. So admittedly, this is a much larger setup and the consolidation is much larger as well. But it was exactly the same as we sort of saw here. The break and it's just consolidated on the pullback. And now we're starting to see that little move forward. Still remaining to get above that sort of first initial breakout highs to then sort of be looking to target up around that 415. So 413 to go to 415 once you get a move above there. We've got the RSI's definitely got sort of room to move to support that kind of that move. So I wouldn't be surprised at minimum we're going to get a test of 430. 430 will be the big one we want to see. Either you're going to get your break and push through, and as I said just a second ago, we're going to see that sort of like 415 zone area up over here. Or alternatively, we see the sellers just jump back straight in again, like we have seen over here. So this is where we're sort of looking. So I do believe we're going to get a touch up of here, but it's just a matter of sort of what happens when we get up here. Does it push back here, and we just sort of see a start of a sort of a larger range that sort of breaks through here? If that is the case, then I'd be looking down to sort of 417 for a bit of a pullback here before another run up here and a potential sort of range just playing through this zone here. But I do believe there's more upside with copper to come. So I'd be more inclined to buy dips than to try and sort of pull snippet shorts and then find that's the time you get caught and it just rips through. Because of course, like copper, when it moves, it can move pretty well. But overall, you can see it's a little bit slow because it grinds like day in, day out. But when it does move, it can move a couple of thousand points pretty quickly. All right, quick look over the news just for the week. I'll sort of refresh this one a bit. As I said, big one's FOMC. That's what we're looking for this week. I mean, starting off with the week, actually, no, that was this week past. Empire State Manufacturing, US manufacturing here. Look, it's still very weak, but is expected to tick up a little bit. So, in the right direction, I suppose, but, it's still nothing to sort of really sort of make people go, okay, yep, this is looking like, this is a great sort of opportunity. If you do get a sort of a big jump up in this, that'll obviously spur a little bit of US dollar bid, like a bit of US dollar buying. But yeah, I wouldn't be expecting a great deal. I've just actually, as I'm saying this, I've noticed we've got a bank holiday in China and bank holiday in Japan. So I'm expecting Asia session to be quite quiet. The bank holidays are always funny because like it can go one of the two ways, really. Most of the time, I would say it's probably quieter than busier. But at the same time, you've also got the chance that sort of, because people aren't at their desks, somebody wants to run it, there's nobody on the other side of the trade to stop it. So you could see things move quite fast, but I would say most likely it's going to be in that sort of slower sort of period. Moving through, again, not really much for Aussie or anything. We got CPI out of Canada where they had 20, so trimmed or median at 2.4, sorry, 2.7 down to 2.6, 2.4 down. So like well in acceptable ranges for where they want to be. I mean, 2% is kind of the universal target, or always has kind of been, but I think more people are a little bit more relaxed nowadays in that and sort of give it a bit more mid twos to 2 to 3% kind of thing. So they're definitely sort of well in that area there. We got retail sales in US looking a little bit of a slowdown there. Again, the same sort of thing. If we get a low number here, that's going to sort of, again, put a little bit more pressure on the US dollar and vice versa if we get a stronger number there. Really moving through, we got again very light for Aussie. Aussie just has got no data coming out this week. Really, it doesn't seem so far. Up to the Wednesday, and now we got CPI in UK. Again, look at these numbers. I mean, actually, oh wait, where are they at? But I'm sure they were up at like 10% or something at some stage. So they're really sort of, as again, sort of getting back on top of these things. Um, FOMC, this is the big one. So here we are, sort of saying that look, it's pricing a 25 base point cut, 5.5 down to 5.25. This is really going to be the talking point of the whole week. Everything's going to be predicated on this, and we're going to have to sort of, as we get a little bit closer, we'll devise a bit more of a plan. We got employment from Aussie. Aussie's been, if this, I love this one. He sort of spammed 20k forecasts every month, and they're just wrong like every month. I mean, 19.9 came in at 50. Surely next one, 20.2, 58.2, 25.8. Yeah, I mean, I don't know how long they can keep sparing these numbers. I should probably look into it more as to sort of if it really all is all just based on such a large immigration sort of coming into Australia that are really giving us such incredible numbers. Because as we said, like, these are the things that the sort of RBA are weighing up. It's not just sort of like, a weak GDP, but, once he's still sort of adding all these jobs to the economy, and you got to remember Australia in comparison, 58,000 is a big number for us. Um, they're not the signs of cracks in the market in to the point where you're like, okay, we're about to sort of go into recession. Going into recession is sort of like, companies aren't hiring more people when they're worried about it. They're going to be paying their bills next week or next month. You know what I mean? You're not expanding at this rate. Like, it's like, oh, geez, I might lose my job next week. Let's go buy a new car. It doesn't work like that. They'd be bunkering down. These are the things you got to look at, and you got to weigh, like it's got to weigh into your analysis with what they might be doing as well. We got our unemployment rate still remaining same at 4.2. Then we got we got pound, we got them sort of coming up with their monetary policy looking to hold at 5%. And then moving through rest of the week, we got BOJ as well. So there's a lot of rate decisions coming out this week. And I think this is another one that sort of people are really sort of looking forward to see if they're sort of, I mean, it says that it's not doing anything. It's going to be sort of holding, but it'll be interesting to see how this one sort of happens because obviously JPY is really sort of coming back to life. And particularly when you start, as I said before, when you start to see a weaker US dollar and DXY, when people go into risk off mode, which inevitably they do from week to week, whatever, like as the flows go in and out of the market, other sort of maybe geopolitical factors get weighed into it or whatever the case may be. When people go to risk off mode and US dollar's not as shiny or as attractive, they're going to look for the other ones, and this is why you get a push in gold. This is why you'll get a stronger yen. But in saying all this, though, look, it's been the talk of the town for Fed cutting for a long time. So you've got to also keep in the back of your mind the idea of the buy the rumor, sell the news. So if they do get this big cut, as I said, initial reaction will definitely be down, but you want to see that continue to go down. If that cuts and it drops down and then reverses and takes out that data drop point within half an hour, 2 hours, I'd say watch out because I'd say that is for me the signal of buy the rumor, sell the news, and I think that's going to be the start of a US dollar crunch. Not necessarily like it's going back to 104, 105, but certainly I wouldn't be standing in its way straight away. I'd be looking to sort of buy some US dollar for a short-term trade, and I'd be looking to sort of find some lower levels on the corresponding pairs to sort of find a base and then buy back up once it does start to cool down. But that, as I said, that's the big one for the week. The FOMC, and then, of course, the big press conference afterwards as well. All right, that's it from me.